Good morning. Okay, so welcome to Cafemutual Passives Conference. This is the fourth edition of the conference. Before I dive into my presentation, let's look at some of the major highlights of the passives industry. The passives industry today is 11.56 lakh crores. Like Anita said, it accounts for a whopping 17% of the total industry AUM. And just in case many people here think that the passive products are meant only for institutions and for HNIs, let me correct that impression. There are 4.19 crore folios in passives. So almost 1 out of 5 investors is today in the up is a passives customer. So clearly passives are here to stay. And today what we will do is we will learn about a new approach to market passives. So let's see where we stand today globally. Uh, how many of you know that in America, passive AUM is higher than that of active AUM? Okay. Another statistics in many developing countries and developed countries, including China, the flows in passives is higher than that of active. Okay. In India, we are at 17%, but soon, looking at the progress that we made in the last 5 years, I'm sure the share of passives will only keep increasing. So, my question to you is, are you ready to sell passives differently? I'll tell you why. Because selling passives is not about selling excitement. It's about selling reliability, it's selling cost effectiveness and transparency. It requires a different mindset. हम लोग का जो conventional approach है वो ये है that I will help you choose the product which will outperform the index, which will give you the best possible returns, right? Conventionally, that is how we have positioned ourselves. So we say that we will help you select, we'll help you choose the right product. But what is the new way? The new way is that you have a guaranteed structure. Guarantee in the sense that the market returns will be definitely available to you. It will not overperform, but it will not underperform either. So you are assured that you will get the market returns. And the focus is on delivering outcome. So आपका क्या जॉब बन जाता है? आपका जॉब बन जाता है not fund selection, but to give advice. आपका जॉब क्या बन जाता है? Not fund selection, but to do client education and to focus on outcomes through asset allocation. When you start your journey with passives, and for those who've already walked that, I'm sure you would agree that there are 3 different kinds of investor mindsets. पहला है skeptics, दूसरा है opportunist, और जो तीसरा है वो है pragmatist. So let's see what these mindsets are. जो skeptic है वो बोलता है कि यार passive funds are too basic, ये इसमें मजा नहीं है. Okay? He's seeking excitement. How? By he believes that he can beat the market. He believes he can select the funds which can beat the market. He believes all the hype about star fund managers and their very, very interesting investment philosophy. And he believes that finally, ये जो passive funds हैं, they are lazy way to access the stock markets. So what do you tell these people? So here, I think the first pitch has to be that even top fund managers fail to perform consistently. Right or wrong? Right? Anyone who has been here for more than 5 years today knows that past success is really no guarantee of future success. In fact, if someone's done very well, someone is in the top quartile, it's top decile, is very unlikely to repeat that feat a year later. Okay? So we know that top managers also fail to perform consistently. The second thing is, our the passive funds are meant for safety, consistency, and low cost. And in fact, that is the reason why even global institutions today prefer passives to actives. On the second category, I said, is the opportunist. What is the opportunist? He's looking for the next big thing. उसको हर वक्त नया चीज चाहिए. क्या बिक रहा है, नया क्या है. He doesn't want to be left out. He wants to he wants to try all the trends. He wants to be on top of all the new ideas. And he's not loyal to any particular style. And he is always trying to find out where is the market headed. हवा किस तरफ चल रही है. So how do you pitch to this person? Tell him that the trend today, he's looking for trends. The trend is that globally we are shifting to passives. And that's why savvy investors, in fact, one thing that we've noticed over the last couple of years is that savvy investors have moved to passives after registering gains through active funds in the last 5 years. Okay, so that is what a lot of savvy investors are doing. Finally, we have the pragmatist. So he's someone who's disciplined. He's not so focused on outperformance. He's more focused on outcomes. And he is likely to value financial discipline. So how do you pitch to this person? You focus on consistency and cost efficiency because passives help you stay on track. And since he's a disciplined person, he's not looking so much at outperformance. He finds that passive funds help him keep on track. So as distributors, what strategy do you follow? So like I said earlier, instead of focusing on performance, focus on goals. Investors don't invest for abstract reasons. They're not interested in a 14%, 15%. They're more interested in achieving certain goals. So focus on their goals, like children's education, retirement, and so on. The second approach is sell the power of lower cost. As we all know, passives charge typically much lower fees than the active funds. And बूंद बूंद से तालाब बनता है और यहाँ पे ये तालाब बहुत बड़ा बन जाता है एक्चुअली में क्योंकि अगर आप देखेंगे 10 lakh invested in a fund which is delivered let's say 12% compared to a fund which is delivered 12.5%. Look at the savings that you generate. Look at the savings that you generate over a period of time. Over 5 years, you save 37,000. Over 10 years, you save 1.3 lakh. And because of the power of compounding, this difference goes to a very impressive 3.74 lakhs. Okay, on an initial investment of just 10 lakh, this is the difference in outcome when there is a 50 paise ka fark over 15 years. Finally, there was a study that we carried out at Cafemutual. Okay, we looked at the funds which had been around for 5 years, active equity funds which had been around for 5 years. And what we found was that only 100 funds out of 293 funds were able to beat their relative index. So only 1 out of 3 managed to beat the index. 2 out of 3 were underperformers. And this is a story which is played out in all markets. And as the markets become more efficient, they become more institutional, this trend will only go higher. Okay. So a lot of you will now, when you talk about passive funds, I'm sure that you would be encountering some objections. People may say that give us something more interesting, give us active. So let's look at how we can counter those objections. So they'll ask you, why should I invest in passive funds? Won't I get better returns with an active fund? So what do you tell them? That your concern is very valid and everyone obviously wants the best possible returns. However, you bring a new perspective. And like I said, the new perspective is not about focusing on performance because focusing on performance is not a sustainable long-term strategy. There are fund managers who perform during certain phases of the market and then they underperform. So it's not possible for any fund manager to consistently outperform over the years. So today, people are focusing on higher returns, but on consistent, low cost, and reliable returns. Like I said, give them evidence. There is something called as SPIVA reports. How many of you are familiar with SPIVA reports? So this is basically a study by S&P. They publish it quite regularly, and they publish figures regarding the performance of various categories of funds. So studies like SPIVA prove that 70 to 80% of the funds can underperform. Like I said earlier, बूंद बूंद से तालाब बनता है, and through passive funds, typically you generate cost savings, and these cost savings can get you 1 year of extra education, can pay for 1 year of education for your children, can pay for a small holiday in future. Position passives as a core strategy. कि आपने गोल्स को अचीव करने के लिए पैसिव चाहिए, थोड़ा तड़का लगाने के लिए थोड़ा एक्टिव भी अपने पोर्टफोलियो में रख सकते हैं, बट कोर स्ट्रैटेजी शुड बी अराउंड पैसिव फंड्स. एंड फाइनली व्हेन यू क्लोज, it's not about the next best thing, it's about building wealth steadily and safely. Passive funds help you do exactly that. How can I help you? Should I help you with a portfolio? These are some of the, while I was researching for this presentation, I picked up some very clever lines, some very powerful lines to convince clients. And I really like them. And they capture the essence of passive funds very beautifully. So, first of all, position this thing as being sexy. Boring is the new sexy, especially in investing. Okay, so just because it is a fund category which does not give the excitement of the ups and downs of the performance of an equity fund doesn't mean that it's not sexy. It is sexy. Boring can be sexy, especially in investing. The second thing that the second thing here focuses on cost. So our costs are certain, the returns are not. And let's control what we can. And like we said, saw the examples, how a 50 paisa difference in fee can make a big difference over a period of time. Then passive investing is not about settling for less. In fact, you're buying security quietly and consistently. So consistency is one of the biggest virtues of passive funds. And finally, consistency beats chasing returns. Okay, so with that, I come to the end of my presentation. I will try and sum it up. So it's not about selling hope, it's about selling uncertainty. That's point number one. When you're selling a passive fund, you're selling a philosophy. And the philosophy is low cost, discipline, and reliability. And finally, it is a matter of time before every portfolio has passive funds in it. The question is, will your client be buying it from you or your neighbor? With that, I come to the end of my presentation. Thank you for being a wonderful audience. And if there are any questions, I'll be happy to take them.
You said fund selection problem won't be there. Even that problem is there in passive funds also. There are almost
Correct. So you're right, but the formula to do fund selection in passive funds, according to me, is very simple. There, you can do a quantitative study. According to me, you have to pick up the most efficient products in the passives category. If it's an index fund, you look at what is the tracking error and what is the tracking difference. ये data मिलता है. Based on that, you don't have to use any fancy models. You don't have to use any qualitative parameters to evaluate passive funds. Very simple. The one with the lowest cost, the one with the lowest tracking error, the one with the lowest tracking difference is the one which is going to do well in future. Go blindly by that. So that would be a good approach. Okay, as far as ETFs are concerned, similarly, ETFs have two more factors which have an impact. Other than, so one you have tracking error, tracking difference, then impact cost. When you buy and sell ETFs, if there is not much liquidity, your rate price discovery may not be very good, and the final this thing is impact is the turnover. What is the volume of an ETF on the stock exchange? Jitna ज़्यादा turnover hai, that means that fund is likely to be more efficient, will likely to have buyers and sellers at the prices that you will be happy with. What style-based funds? So factor investing, okay. So factor investing bring in an element of you know uh, uh, somewhere of an active approach. Now, here you will have to choose whether to go for a momentum, quality, value, and etc. So you will have to make that choice on what style works for you. Again, my theory is that if you were to do the back testing of these styles, you are likely to produce a good result. So there are certain market phases when quality is rewarded, there are certain when value is rewarded, certain where momentum is rewarded. Perhaps research will help you choose the best possible fund. Sorry? Research is needed. No, no, you're not obviously going in blind. They're not commodities. They, they're not finally 100% commodities. There is an element of commodification in passive funds. But yes, in choosing and selecting funds, uh, but it's a much simpler exercise. And the thing is, it's far more predictable. हो सकता है 5 years down the line, the fund that you've recommended may actually be more costly by 2 or 3 basis points or 5 basis points, but it is not going to be dramatically different for this thing. And when you choose an active fund, the impact of your decision can be very dramatic, both on the higher side and on the lower side. Okay. Thank you so
Thank you,
much.
sir.
So with that, uh, yeah, have a nice day. We have a lot of interesting sessions lined up. Stay back till the last. We have a stand-up comedian called Vipul Goel. So that would be something that is very interesting. I'm looking forward to it. So have a great day.